think we have some great stuff to talk about this week. We haven't been on in 2 weeks. We haven't recorded in 2 weeks, so there's a lot to be updated. I will say on my end, what I've been working on mostly is stock-based compensation analysis. So essentially figuring out taxes on a stock compensation plan. There are some strategic choices people can make. But the taxes depend so much on the price of the stock, because if you have non-qualified stock options and you're exercising and selling them, that will create income, and that sometimes creates a bigger buffer for people to exercise more ISOs without paying AMT tax. It's a mess. But I will say overall the strategy is usually the same, right? Because like a lot of these people, their majority of their net worth is tied up in the company, and so as a result, like let's diversify some. So let's think about what is the type of things you want to diversify with, and most people end up selling obviously the RSUs because it's a taxable event when it invests. So there's no point of keeping it. It would be the same as them getting a bonus and investing in Coinbase stock if they want to keep the stock. Like it starts there. Like you're buying it at that price, and you've paid the taxes on the vesting.
So Coinbase RSU holders, did they have the double trigger vesting where it required the liquidity event, direct listing or IPO or whatever for RSU vesting, or have they been vesting over?
No, they haven't been awarded RSUs until they knew that they were going to become public.
Oh, interesting. Okay.
Yeah. So I think they had the plan of going public this year, and so as a result, I think that's when they started awarding RSUs. There are certain things I had learned in obviously in tax school or whatever about how things work, but it's very interesting to see it in practice, right? So if a person is about to get stock options worth of 500,000 for the next 4 years, and they get a grant today of 500,000, most likely what's going to end up happening is 100,000 will be in ISO and 400,000 will be in non-qualified stock options. But it's very interesting to see that the math works out, right? So you actually multiply how many shares they got of, or how many options they got of ISOs, you multiply that by the grant price, and it's like 999,999,87, right? Something like that. It gets super close to the 100,000 level, and then everything else to the non-qualified stock option. And then next year, same thing, a new grant of ISOs, it gets you very close, and then the non-qualified stock options. The other thing that I found super interesting about, I had one person who exercised the stock at a lower fair market value than the grant. You would think that the fair market value is just a straight line up. And maybe for some reason there's tiny little blips. I don't know why. I have no idea why. The grant was higher than the fair market value than the exercise.
Probably because of 2017. But if it was Coinbase, then it was 2017.
It took you 2 seconds to figure that out. That's very smart of me.
Thank you. That's because my brain is broken by paying attention to crypto. So it's okay, someone's valuing the company. I knew that their volume dropped off from 17 to 19. In 2019, it didn't seem like this company was all that valuable. I can see why that would be reflected in the 409A internally.
That'd be very interesting to actually talk and confirm that with someone who's adept to the AMT tax form, because essentially would it be it actually, the AMT tax form says fair market value of the incentive stock options over
kind of negative
regular one. It doesn't say the difference. It just says over.
Yeah.
So obviously, if there's no over, there's nothing you can put in there. What's the history of the AMT?
The AMT was specifically written to recapture a bunch of taxes that weren't being paid by rich folks. So it was on municipal bonds. When those had high yields, there was a lot of people not paying tax on a high municipal bond income. Ditto with ISOs, I guess, and whatever else is in the AMT.
What have you been working on lately?
Lately, I have a couple new clients that I'm onboarding. That's most of my brain space the last couple of weeks, and then a little bit of tax stuff. There's people who wait till it's not quite the last minute, but
you're not preparing taxes. So what were you be doing?
No, but it's my preference to be in tax review meetings. So when a tax draft is available, I like to be in that with the CPA or tax preparer who's preparing my client's returns, so I can.
The next topic I wanted to talk about or is the Amazon union. You heard that the union failed, right? I think there's
That's
going to be
right.
lawsuits left and right before this gets settled. But it was an interesting case. I actually really thought they were going to unionize.
I didn't have a view on whether they would or not. I knew it was a really big deal, and I knew that. Well, I had heard anecdotally that um, the Amazon social media strategy, the one that had been very aggressive in responding to the meme about Amazon workers having to pee in bottles or whatever. I someone reported that Jeff Bezos was very specifically incensed around the idea and wanted to be more aggressive in his messaging. So whether or not that paid off, I don't know.
What was it? I remember like someone responding to Bernie Sanders saying like, you're pushing us to have a $15 minimum wage while you're in your state you don't even have one.
I didn't see that one.
I think that was ballsy.
Was it an
Um,
Amazon account that said that?
yeah, yeah,
Oh
yeah.
wow.
The question is whether they're gonna have more fights, union efforts elsewhere. I think there's a union fight coming to New York. Alabama, I think it's very much, Republican state. And so you have tendencies there where I think you wouldn't have the same natural tendencies in New York. So I think it's going to be a harder fight in New York than in Alabama. There's actually, employees. I remember in South Carolina, there was a unionization effort going on with some automaker, and they actually, like, the people voted against it.
I feel like South Carolina had maybe a couple auto plants. Can't remember what they were, but yeah, I
Yeah.
haven't followed a bunch of union labor type news, but um, it's definitely important to companies' bargaining efforts, their ultimate like economies, right at the very core level as to whether or not their workforce is fully, partially unionized. That makes a big difference. So it
Yeah.
really matters to management and to shareholders quite a lot. As investors, you've been rewarded very heavily for going mega cap for since what 2012. Like just own the biggest companies in
Yeah.
the world has been just a great strategy, and I think that was probably the case as well in the time of the big U.S. monopolies, U.S. Steel, Rockefeller, just like own the biggest companies, worked for a long time, and then there was this trust busting period where that stopped working, and it stopped working pretty abruptly for political risk. I think people have said, brought up the idea of political risk for Amazon for a long time because it's a controversial and incredibly successful and monstrously huge company. But
My bet is that, regardless if the company has some unionization efforts, the company will actually do provide positive returns over the long run. It hasn't actually had much of a positive return in the last like 12 months, I believe. It's been trading sideways. The next topic I want to talk about is inflation. I don't know if you saw the latest reading, but 2.6% is something we haven't seen in what, a decade.
and that's what from last March to this March,
Yes.
and that's like one of the broadest readings, right?
Yeah, I think it's the broad. It includes food and energy.
Okay. Okay.
Food, which is surprising, I think, in my opinion. Maybe it's because somebody was saying that there's a lot of supply chains that were designated only for restaurants, like the entire like, you can't just go buy to the supermarket. Like these guys who are selling to the restaurants can't go just and sell to the supermarkets. You know, 20-pound bags of lettuce. Like it's not going to get consumed by a family. Um, so repurposing the entire supply chain to sell to supermarkets isn't something you can do very easily in a short time frame. And most of
Oh,
these
you're
companies
saying
probably
because
don't want.
restaurants are closed.
Yeah, a lot of demand was pulled into houses, and so I think supermarket sales comps of that is like it's been off the chart. Supply chains have definitely had an impact on the inflation number, like limited issues, consumption, moving consumption from services to essentially goods. Yeah, just creating a massive supply chains. I think there was an anecdote about the port of is it Los Angeles or Orange County? I think it's all together. And that port had, I don't know, 46 days of outstanding cargo sitting in the ocean, waiting to be,
Unloaded.
unloaded and moved all over to like intermodal across to go across the country. If you bought some furniture from like Asia, you're gonna see it in a couple of months.
I mostly don't have a view. I don't have like a differentiated view from the market. And markets do, there are ways to measure both current inflation. There's the measurement we just talked about, which is looking backwards, which I think was a surprise to the upside for most people. And then there's, uh, Treasury inflation protected securities markets, where you can go look at a yield curve and deduce some inflation expectations. Uh, Inflation is a word I'm hearing a ton. My brother is a huge inflationist. Shout out Darwin. He just came over this morning and talked about, he's in building, and he said that lumber, everyone has talked about lumber from a year ago, but he said lumber at Lowe's in Phoenix, Arizona is up something like 12% week over week.
Whew.
Like a preposterous number.
The building permits, I think it was like January was the highest since May 2006.
Holy cow. Yep.
Yeah. I think this country is not meant for like GDP growth of 6% without causing bottlenecks everywhere. It's like the country has been optimized for growth of like 3 to 4% max. And then now you get like a 6%. Of course, you're going to get inflation. There's like bottlenecks everywhere.
Here's my big question. You may have a view on this. I don't especially. Do you think that, are you familiar with Lacey Hunt, the famous bond bull?
No.
Lacey Hunt is this guy who, of Hoisington Asset Management. He's a PhD economist, and he famously started an asset management firm to go long bonds in like 1984. And it's just held that trade, like ultra long duration treasuries mostly. And it has been just extremely right on that trade for a really long time. Is that over? My question is the great bond bull market over? And is this, inflation scare kind of heating up economy in early 2021? I guess it started late last year that you started losing money holding treasuries, right? Is that kind of super cycle? Is that 30-year trade, 40-year trade, over?
I don't know. I just think that, if you would printed so much money in the last decade, maybe it's finally coming
due.
Yeah. The dollars that we manufacture in the US for the US economy, they get traveled internationally. And so when economies abroad grow, they will want more dollars. And so, we just have to supply them. So technically speaking, the US could manufacture more dollars and maintain the currency relatively stable against the world, because there's a lot of demand around the world. The question is, if you start to lose value, will the dollar still be the currency of choice for many other places? I don't know. That's another question, because the moment they start dumping the dollar, that's a precipitous fall.
Over my pay grade, dude. I truly don't know.
I mean, I see it in Uruguay, which is where I grew up. The dollar is used for transactions in real estate. The one thing is like salaries are paid in pesos, but in many places they're indexed in dollars. They're like, I'm paying you like pesos equivalent to, $30,000. If the peso exchange moves a lot, then you might have to hedge yourself or like get money from it somewhere else. But a lot of stuff is in what we call those economies, we call them dolarizados, meaning dollarized economies.
Ecuador.
Ecuador doesn't even have a currency, I believe, right?
Yeah,
do they have a currency that's pegged to the dollar?
I don't think they have a separate one. I think they use actual dollars. Yeah.
Panama doesn't have their own currency. They use dollars for that purpose, and then they act as like the European Union, right? Like you don't have control of your inflation, like the interest rates, nothing. You better have a good, tight, fiscal policy. You have to make sure that your current account is stable.
Right. Your borrowing costs are really, really critical in a situation like that.
Usually they're pretty favorable, because anybody who borrows in dollars gets better rates than borrowing in your local currency. But, that's another thing. If interest rates go up, countries that have taken on a lot of debt, they're going to suffer the consequences.
They owe US dollars back. Interest rates rise, therefore strong dollar, therefore harder to pay back the loans that you already took out.
Not only that, but think about this, right? I pay my folks in pesos, and my revenues are in pesos, right? Because like I sell to local markets. And as a result, what ends up happening is that if the dollar depreciates, of course, my costs go down, my labor costs go down in dollars, but so do my revenues go down. And the question is, do I have inputs in dollars? So if I have inputs in dollars, they start to become a bigger portion of the cost structure. And the revenues will usually, in dollar terms, always go down more than the costs. You don't end up in a good position. I have two topics more, but the balance of trade. Since people have been switching services for goods, our balance of trade, our deficit, current account deficit, has grown.
Say that and explain that like I'm 5 years old.
So when you are out there and you have $3,000 to spend, you spend like $2,000 on services, maybe $1,000 on consumer goods. Those consumer goods usually are not produced in the U.S. anymore, but the services are. You go to a bar, you order drinks, like, in that kind of dollars, that amount of money remains in the U.S., kind of like shifting around from services to services. But if you now switch around and you're spending $2,000 in goods and $1,000 in services, a lot of that money is going abroad probably, and I know to one country in particular that we have designated as a strategic competitor. That's going to be really tough. But hopefully, when the economy opens up, it switches back to the regular.
So you're saying it's demonstrably true. We have already started spending much more on goods compared to services than 2 years ago.
Oh, that's for sure. I haven't checked the numbers. I can rest. I know that the deficit is much larger. So, and it's a period of time where like the economy should not.
The deficit meaning the trade deficit.
The trade deficit, fiscal deficit also. So whatever I say was true there.
Yeah, all deficits.
Housing. When we talk about inflation, housing inflation has been out of the roof. I mean, I've seen it myself. I'm trying to buy a house, and my wealth is not keeping up with the housing inflation. Instead of looking at bigger houses over time, I just have to look at smaller houses.
For more and more money, yeah. You had an indicator. What was it? Housing starts, or is that different from permits? Of course,
permits is usually the leading indicator, right? So permits is, I would say, a leading indicator over starts. Starts comes after the permit.
What is starts? What is one housing start?
Housing start, I believe, is like when the house, the construction started. The permit is, whatever. I think they get that information from the government, whatever the government entities are. They survey those and get the information. But the housing permits, think about it. There's maybe a little bit of a lead time, right? Between the permits and the lumber.
Yeah.
So, I mean, if you have an enormous amount of growth, I think it was like January, month to month against December. This was January, like in the middle of winter, right? 10.4%. Granted, the February one was down. Sorry, that's permits.
Oh, permits, okay.
Yeah. So that's just going to feed into the summer. Don't remember when there was a trading war with Canada?
I don't know. I feel like this was before. Was this like pre-NAFTA?
No, it was a trade war with with Trump. Like he was
with
fighting
Canada.
Against, yeah, Canada.
I don't remember this.
Yeah, they had a small little mini trade spat, and they said that they were going to limit the import of Canadian lumber.
Mm.
And I think you used to be able, or like private companies used to be able to cut down trees in federal land before, and then I think in the Obama era they took away that, and so as a result, a lot of like lumber mills ended up not having enough supplies, and so I think they either had to import from Canada or they just relied on lumber mills from Canada to fill up the shores. But then trade war came, and slowly now we have higher lumber prices. The unfortunate part about where I live or where I want to live is that the new houses coming to market are like vastly overpriced from what I can pay. And so at the end, I think there was a house I wanted to buy here that I live in New York in the suburbs, and it's pretty expensive. So we were looking at a fixer-upper that the house cost $1 million. It went for 1.2.
Is it just the land? No, it can't just be the land, because we know that construction is expensive too.
No, but the land is the majority. I think it's like 80-20.